We are getting to that point in the year that our focus for 2025 is closing out on the year strongly and planning for 2026. So before we get started, I wanted to take a quick pulse on how you feel that 2025 has gone. So are you very satisfied that your business has exceeded expectations? Are you satisfied where you feel like the growth is on track? Are you neutral? It's been neither good nor bad. Are you dissatisfied where you entered the year thinking that it would be better than it has been? Are you very dissatisfied where it's far below what your expectations are? Or are you still in a wait and see? Not quite sure how things are going to turn out. So it'd be great if you can vote using the poll that you see on your screen, how you feel that 2025 has gone. We'll give it another moment to wrap up. And I think we could look at the results. Well, it seems like most of you are kind of in the middle, but veering actually more on the positive note, which is really great to see. So it looks like almost 80% of you are saying that it's neither good nor bad or better, which is very interesting, and we'll share some data in terms of what we are seeing in terms of market growth. All right, so for the webinar today, what we're going to do is provide, first off, an overview of how 2025 has gone and what we expect going into 2026. We'll be deep diving into 3 key themes that we believe are going to define growth in enterprise services. And these include the trend towards what we see as a convergence of IT and operations, as well as rising demand for tech and tech services from the mid-market. And of course, no discussion on key trends would be complete without addressing AI. Poonam from Wipro submitted a question in advance asking, what will be the impact of AI and the likely disruptive impact in the next 12 months? I believe a few of you have also submitted similar questions to that effect. We'll be answering that and more under the section Impact of Agentic AI. And speaking of questions, as James has said, please submit your questions using the Q&A function at the bottom of your screen. I'll be monitoring these as they come through, and if time permits, we'll try to answer the questions either during the webinar or at the end of the webinar. And for the many of you that have submitted questions in advance, if we don't get to it in the webinar today, we will be following up with you separately, so don't worry about that. If we take a look at the IT BPS services industry, it has been some turbulent years in the past. After a dip during the COVID-19 era, we saw a sharp increase in demand for IT and business process services during 2021. But the past few years have been tough for the industry as demand has kind of corrected itself to a more reasonable level. But it has also dipped further than that. And even when we entered into 2025 with some sense of optimism, growth appears to be faltering. If we take a look at the book-to-bill ratio shown by the green line up top, and that's charted against the left vertical axis, we see the trajectory of bookings to be quite strong. However, the blue line, which shows year-on-year organic revenue growth in constant currency, which is demonstrated on the right vertical axis, that really has been lagging, right? So I think that that is what some of you have felt when you were saying that you're dissatisfied with the way 2025 has gone. If we break this down by region, we will see, though, that the overall industry growth figures are different, quite different across the mature regions of North America and Europe, which is pulling down the industry average. But Asia and Pacific and Latin America, the emerging regions, are actually demonstrating really strong growth. And these markets are actually currently reflect, much smaller markets compared to North America and Europe, but they are growing at 3 times industry average. So there is a lot of areas that are potentially, more optimistic if you look for them. So on to our next poll. What we would like to do is take your pulse on the sentiment heading into 2026. What do you think will be the biggest challenge that will drive your growth in the future? Will it be cost and margin pressures? Will it be the geopolitical uncertainty and location-related risks? Or is it complex regulatory environments? Certainly slowdown in demands are present from some of the clients that we speak to, and increased competitive intensity as the last one. So you only get to choose one as the biggest challenge that you think you're going to face going into 2026. Would love to hear what you think. Is it cost and margin pressures, geopolitical uncertainty and location risk, complex regulatory environments, slow down demand, or increased competitive intensity? Okay. I think we might wait another moment. Okay, let's see what the results say. All right, so it looks like cost and margin pressures top the list. Nearly 50% of you are worried about that. And that is also, going to be influenced by the slowdown or anticipated slowdown in demands. I think given some of the geopolitical macroeconomic environment, it's not surprising to see that about 25% of you show geopolitical uncertainty, location risk, complex regulatory environments as your top area of concern. And throughout this all, you're always worried about your competitors too. So thank you very much for your views. So without further ado, we do want to talk about the meat of this webinar, which is really around the 3 key themes that we believe is going to drive growth for enterprise services. First is the convergence of IT and operations. So we definitely see that organizations are increasingly aligning their IT and business teams to drive more value for their organizations. And they're doing this through product-led operating models. And we'll talk a little bit about what we mean by that in the next section. Impact of agentic AI, that is really top of mind in all conversations that I've had. It has the potential to compress revenue streams for many of you. who operate in the service provider space. But at the same time, it can unlock new opportunities, and we can talk a little bit about where that might be in that section. And the last main theme that we'll be talking about today is the rising demand from the mid-market. So by mid-market, we define these as organizations that have revenue of around $1 to $5 billion US. And across the board, across all the enterprise services that we track, we are seeing double-digit growth in that segment. So we'll go into that a little bit deeper when we get to that section. So what I would like to do is turn it over to my colleague Yamo to kick us off.
Thanks, Shirley. In these times, right, enterprises are exploring every possible lever to maximize business outcomes for them. And traditional levers such as technology modernization, process optimization, and data analytics continue to prevail. IT and ops integration has emerged as one of the critical priorities for them this year. And part of our key issue survey that we have conducted, the importance of the rank has climbed from 8 to 4 for IT and ops integration. And we deep dive to see why this challenge or what's the reason behind with this objective has become a critical point, right? Organizations continue to struggle with a misalignment between business and IT operations. And to bridge this gap, they are adopting varied operating models, specifically product-led and platform-led operating models. And this is proving out to be instrumental in aligning their business value with IT delivery overall. If we move on to the next slide, right? And having realized that transformation cannot exist in silos, enterprises take a converged approach overall for IT and operations. And they are adopting these platform-led operations with which they have reaped significant benefits across different levers. The revenue, profitability, operational costs, in terms of time to market expeditions, and employee satisfaction and customer satisfaction overall. And now this translates into a different imperatives for service providers as well, right? And if we move on to the next slide, having looked at what this translate into service providers will need to restructure their overall engagement models, right? They will need to pivot from delivering projects to become strategic partners, owning or co-owning specific products or platform outcomes with clients. And within clientele, this would be multiple business owners focusing on multiple functional areas or overall geographies. And this is where overall the pricing and contracts increasingly will shift. And this will shift into an outcome-based model. And this is where industry and functional expertise of service providers will become very critical.
Yes, thanks, Yamo. I did want to just add a point. Many of the provider organizations structured their organizations to reflect their client organizations, and that means that there are separate teams that work with IT versus teams that work with business operations leaders, stakeholders, such as, CFO and controller, or the CHRO, or, CPO, and so forth. So the key really to unlocking growth, to capture, this theme of convergence of IT and business ops, is for providers to actually collaborate first, more effectively internally within their organizations. But they also need to help their clients be able to navigate across their organizational silos. That is something that is easier said than done. But that will really be differentiating. and will drive that growth for providers when it comes to this theme.
I think maybe we can move on to the next section, right? I think this is the most sought out section for everyone. We saw many questions on this one, the Agentic AI one.
Yeah, the screen seems to be frozen on my side for some reason. Ah, there we go.
Okay. So yeah, as generative AI continues to mature, right, that leads to the next stage, which is agentic AI. And agentic AI has picked up pace and traction in over the last few years. And many of you had a very specific question in terms of what's the specific number or the overall product market size, right? So as of 2024, we see this market to be about $100 million, but it's growing very rapidly. For 2025, it's a 2.5x over the last previous, so it's around $300 million. And we foresee this growing between 150 to 250%, right? 1.5 to 2.5x. That's a massive growth that's happening within the market. And one thing agentic AI represents is it's a shift in the industry from decision or insight generation to autonomous decisioning and execution. So, for example, within finance, AI agents can now entirely execute reconciliations, and in supply chain, they could reroute logistics autonomously with limited human intervention, right? And this redefines everything around efficiency, resilience, and scalability. As agentic AI matures and scales, enterprises will start to layer in agent-based orchestrations, right? And this will come across systems, including ERP, CRMs, which will create a self-healing and self-optimizing systems of execution. And this is not a third layer, but the system that matter as a transformation for the entire digital stack that orchestrates all the agents orchestrating with one another. And this system of execution will become a interesting battleground, right? And this would be across the ecosystem. It would be for all the enterprise platforms of the likes of SAP, Oracle, Salesforce, for the hyperscalers, AWS, Microsoft, and others, and also some of the ISVs that are there in the market. And interestingly, some of the system integrators or service providers are also pivoting towards the asset-based services delivery model, right? That's where the systems of execution will be a critical layer that enterprises will need to focus on, and all the ecosystem partners will compete to own this autonomous execution layer. And if we move on to the next slide, right? However, historically, what we have seen in the market is there has been some resistance overall, right? With some exceptions among the enterprise cohorts being innovators. Enterprises take some time to adopt the technologies, and there are varying reasons for this, right? Existing technology debts that may have overall readiness from a data integration perspective or even user perspective. And the most interesting resistance is the leadership resistance. This is where having the right business case and bringing in the leadership buy-in becomes critical, and that often leads to a longer adoption timeline from enterprises. And hence, overall, as a technology, the requirements may be not the right requirement, but I think this is where a solution comes in to be critical, where service providers guide enterprises with the right business case and KPIs. Vignesh, anything that you would want to add here?
Yeah, so if we take an analogy of previous technologies that has disrupted operations, right? So take cloud for an example. It took roughly about 7-8 years for organizations to adopt at scale. And take another example, RPA, right? For RPA to for enterprises to adopt RPA at scale, it took roughly about 6 to 7 years. So taking that as an analogy, that technology may be ready, but organizations adoption, especially at scale, we have seen a significant lag, right? So it's to give you another example, it's more of think of agentic AI as a F1 car, right? We don't have the roads ready yet, right? So that's where the opportunity for service providers to bridge that gap. And we strongly believe service partners have a really crucial role to play in bridging this gap. Yeah, over to you.
Yeah, thanks, Vignesh. Yeah, moving on to the next slide, right? And then what will be required in order to help address these and ensure an enterprise scale adoption, right? As enterprises face this readiness gap in terms of scaling agentic AI transformation, success requires interventions across the end-to-end services value chain or the planning chain, right? From an advisory support perspective and upfront roadmap creation, process re-engineering, and a detailed risk and readiness assessment of enterprises is required. And once that's done, moving into implementation will take in terms of progress from POCs to scaled multi-agent workflows. I think what would be critical is to first test some of the POCs, identifying some of the use cases where agents can be leveraged, and then moving into an enterprise-wide agentic integration and orchestration will help in unlocking the real value. And finally, what would be critical is also in terms of ensuring the sustained impact through operations or the managed services perspective. And this would include interventions across governance, leveraging responsible AI practices, guidelines, having the right human in the loop intervention, the change managements, and will also involve all the agent ops and COEs that will need to be set up specifically for AI and agentic AI interventions.
I think
With
I'll
that,
take a moment here. There are a couple of questions from Ashi. The reasons for slow adoption of agentic AI, and this is a common question that we get from almost all stakeholders, right? So all of the reasons that Yamo you were talking about in terms of tech being ready, data being ready, talent pool being really ready to work in conjunction with AI, all the reasons, right? But the core reason that I strongly believe, again based on multiple conversations that I recently had with CFOs and CPOs, is the mindset shift and the attitude shift, right? So recently, in one of the conversations with the CFO of a large retail organization, he mentioned that a lot of organizations look at what ROI means in a very different way, right? So if we are investing in AI as a technology, what is the ROI that I'm going to get, and what is the time frame for ROI? That CFO said that's a wrong way to look at it, right? So when you're investing in AI, it is more about what's the risk that I am willing to take, what's the dollar value that I am willing to let go, right? If it fails, right? In that particular instance, they have invested in more than 10-12 million dollars without an ROI. And after multiple iterations of that, they were able to realize disproportionate and exponential return from the investment. So the key point to note here is the return and the journey in AI is not really linear, right? So you will come back to square one, redo things. So it's really having that open mindset to experiment and take risk.
yes, Vignesh, I think we have a couple of other questions as well. In terms of what percentage of Fortune 500s are experimenting agentic AI and what percentage have put in production, right? And we recently did an research specifically around that, right? In terms of our perspective, 73% of all the enterprises have started to explore agentic AI to be embedded within business applications. And by 2028, we see 85% of plus enterprises planning to invest in agentic AI in some of the other forms. And we also looked into numbers from a POCs to scale the transformation perspectives. And the way that we compared was we tracked the number of POCs and POCs to production phase in 2023 versus 2024 till completion. And what we saw was the POCs to scaled AI conversion was increased significantly from 15% to 30% last year, and we are optimistic, and we see that number to be higher for 2025 as well. And more than the increase to POCs to scaled use case, I think the total number of use cases as well increases from close to 3,000 to 10,000 plus that Everest Group has been tracking overall. I know we have a lot of questions. Maybe we can take that as we move along.
Yeah, so if we move on to the next slide, I think there were a lot of questions from participants ongoing and prior to the webinar as well on what will be the impact on outsourcing services, right? So what it will lead to BPO market. So we have done a modeling exercise, and again, we have taken finance and accounting outsourcing as an example here. I'll maybe spend 30 seconds. There were some assumptions that we have made that there were, I'll walk you through the logic, right? We strongly believe, if you take, again, finance and accounting as an example, as a value chain, there are processes which can be completely autonomous, like highly transactional in nature. There are processes which require some human oversight, and there are processes that requires human in the loop. So we categorize the complexity of the processes and the potential impact of AI, specifically agentic AI, that it will have on services. Again, we are talking about the services that are outsourced and what impact it will have. So F&A outsourcing market is roughly about $16-17 billion right now, and we believe agentic AI will lead to compression. That is for sure, right? Some of the traditional BPO revenue tied to FTEs, right, are going to go down. In the time frame, we can argue depending on the readiness, whether it's 2 years or 3 years. But in the short term, there is going to be a compression of traditional BPO market. Having said that, it will open up new revenue sources, new avenues for service providers who are in the BPO managed services business, right? So from a pure processing of transactions, there will be a new category of services in terms of data management, implementation, integration, training of those agents or models, and then a lot of organizations to bridge that readiness gap need advisory consulting services. So it'll open up a new set of services beyond the traditional BPO, right? At the same time, there will be new outsourcers who are reluctant to outsource, will start to outsource to get access to agentic AI as a technology. So AI-led service delivery model, a lot of organizations will come up for outsourcing, and certain organizations may be very, very reluctant to offshore, right? But agentic AI will lead to, will address some of those concerns, and it will lead to more organizations to outsource. At the same time, there are some complex activities within the enterprise operations which organizations don't really outsource, say supply chain planning or budgeting, forecasting in finance and accounting. More and more such activities will be outsourced because the sophistication of solution that agentic AI provides, right? So with this in context, if we assume the growth that of the F&A BPO market is to be 7%, and in the near term of 2 to 3 years, we anticipate this will compress. But since it will open up new revenue sources, the F&A services market will start to accelerate. The key point here is providers who are leaning into this agentic AI-led or AI-led service delivery model without cannibalization fear will be able to capture that disproportionate market share. And we have seen this in the past when RPA came into the picture. Providers who are able to quickly adapt to tech-led service delivery model were able to grab more market share. We are at cusp of another disruption. So it is really important to act now to be ready to capture the market share that is now going to open up in the next few years. Okay, I think we can move on. So with that, since we are talking a lot about agentic AI, a quick poll, right? Based on your vantage point, and if you're from an enterprise audience, what proportion of your active engagements have agentic AI components? Like if you're from service provider community, based on your vantage point among your existing clients and engagements, what proportion of your active engagements have incorporated agentic AI components? So I think there are a lot of questions around proportion of organizations who have adopted. I think we have a lot of attendees, stakeholders here. It will give a quick view of real-time view of what we are seeing. But in the meantime, Shirley or Yamo, what's your sense, right? I know all three of us have different point of view. Some of you may have conservative view. What do you think is the majority? Less than 10% or 20 to 30%?
I think I'm probably more on the conservative side. I think if we're talking about pure agentic AI, it would be on the lesser of the ranges. I still see there being quite a bit of confusion around the term agentic AI. Sometimes it's being confused with using agents. Sometimes it's being confused with automation, right? And sometimes it's just also confused with traditional forms of AI. From my point of view, agentic AI is really about executing decisions on decisions that's being made by AI. And that is a step that many organizations are still a little bit hesitant to take the humans out of the loop. That's my take on it.
Okay.
Yeah. So my take again would be similar, right? It's on the conservative side. But two, interestingly, what I see is technology providers are cherry picking some of the enterprises and offering some parts of it for free, right? And that's where I'm seeing some good adoption within focused functions and industries. And I think that's one of the question here as well, right? So I'll try to address that as well. The most in terms of function that I see adoption for agentic AI is the CXM side of it. It starts with CXM, then FAO, and then procurement, supply chain, procurement, and others. From an industry perspective, it's BFSI, HLS, followed by retail, CPG, and others. So it's more in terms of customer serving or asset light industries that are being front runners in terms of adoption, and followed by asset heavy industries. And I don't want to throw a number right now and be biased a bit, but yeah, it's somewhere to me between a quarter to 33 1/3. So that's where somewhere it would be.
All right, thanks, Shirley. Thanks, Yamo. We have the results as well, right? As we get more than 70% answer that less than 20% of the engagements have agentic AI components. Again, from our research specifically on outsourced services, we see a lot of pilots, POCs happening. But very, very few organizations have adopted the true agentic AI, right, as a solution at scale. So this is still going to be an interesting space. There's a lot of potential, but it will take a year or so for organizations to adopt at scale. Okay, moving on. We can move on to the the third topic for today's discussion, which is focused on mid-market, right? Again, if you look at enterprise services, both IT services and also BPO managed services, mid-market, I think, Shirley, we can move on to the next slide. Mid-market as a segment is growing really, really fast, right? Especially post-COVID. So the way we define mid-market is organization with revenue $1 to $5 billion dollars, US dollars, right? And small being less than $1 billion, and anything above 5 or large enterprises. So post-COVID, we started to see a lot of mid-market organizations outsourcing, engaging with third-party providers, both on platform services and for enterprise functions like finance and accounting, procurement, supply chain, BPO market, right? And we strongly believe that this is going to be a high growth segment across all areas for third party engagements. And a couple of reasons why we believe that, right? So one is we see a lot of affordable solutions for mid-market from service provider community, right? So as a service model, capital light, OPEX based model coming to support mid-market. We see a lot of agile models coming in as well. At the same time, mid-market organizations are thinking beyond cost, right? Hey, how can I get access to some of the expertise that providers have? How can I get access to technology that providers have invested in? So that's driving the growth. Other theme or driver that we have seen is specifically within mid-market, a lot of private equity backed organizations are engaging with third parties for operations or for platform services, right? So we see a strong PE push for the portco companies to optimize service delivery models, optimize operations, cost efficiencies, and that, right? I mean, we can go on, but we see a lot of innovative engagement models coming up in this mid-market segment. And we believe there are three key aspects why this mid-market opportunity is very different from the traditional large market, large segment engagement constructs, right? So one is a lot of our survey research studies indicate that this segment is much more resilient than large enterprises, right? And we also see a higher degree of openness from mid-market organizations to outsource. So one of the data point is, roughly 80% of mid-market companies expect their outsourcing budget to grow up by 30%, right? We see a lot of first-time outsources coming in. This segment is still, very under-penetrated when we, look at from an outsourcing third-party services construct, right? At the same time, the dynamics of this engagement between service providers and mid-market organizations are also sort of very different, right? And what kind of providers they are engaging with, what are the decision-making criteria, what are the priorities that they have when they outsource are very different, right? I'll share a couple of key aspects. One is this segment is much more open to taking risks, much more open for innovation, and some of the outcome-based constructs, innovative models that we are seeing in between third parties in terms of commercial model, in terms of solutioning model. We are seeing a lot happening in mid-market segment, right? So their risk appetite is much more. At the same time, mid-market companies expect agility in engagements, right? So, for example, they don't sign for a longer term contract, but a lot of the contracts and engagements that we see are starting small, shorter term contracts compared to large engagements, but are moving really fast. These are small but really high velocity deals that we are seeing in this segment, right? So what it means for providers, service providers, and what it takes to capture this opportunity, right? And Shirley, if we move on to the next slide, as a provider, you really need to have agility across all aspects when serving mid-market, right? So in some of the deals where a provider is able to sign and engage a few aspects that we have seen, which demonstrates that agility, right? So one is the type of account management and governance structure that they are putting together as part of a solution, which is agile enough, right? Second is agility in financial or commercial engagement model, right? There's one really interesting construct that I have seen, but it's not very common, is a small provider engaged with a really small mid-market company. There, the financial construct was part of the payment or part of the fee is linked to equity, right? So the enterprise was paying service providers in equity, right? That shows I'm investing in you as a company, right? This is not common, but a lot of such innovative constructs we are seeing in this, right? At the same time, how you put together a performance management structure, how do you put together solutioning which are open to change mid-cycle, that demonstrates the agility, and that's what mid-market companies prefer, right? The second one is really bringing in innovation in service delivery. As I said before, this is a sector that is really open for innovation. A lot of growth-oriented companies, digital-born, digital native companies. Yes, cost is still a criteria, but they are looking for what kind of provider bring in beyond cost and operational efficiency. Can this provider bring in solution which help me in top line, which help me in working capital, right? So it really needs to demonstrate that in solutioning. And lastly, the ecosystem that a provider brings in is important, right? It's not about as a provider what you are delivering. They are expecting providers to bring in a fit for purpose ecosystem. It's not about, hey, I have partnership with hyperscalers, I have partnership with SAP's, Oracle's, I have partnership with Automation Anywhere or Blue Prism, but really demonstrating that I have partnership with disruptive vendors who are suitable for organizations of your size, right? And I am being the orchestrator of bringing in this ecosystem to solve. So these are some of the tenets on which we see mid-market companies are choosing service providers. Okay, we can move on. Yeah, one other aspect is mid-market companies require a lot of contextualization and verticalization in their services, right? And this is a chart that shows that the growth of different verticals when it comes to professional services across managed services and IT services, the varying degree of growth and size, right? Unlike large enterprises, mid-market companies are expecting providers to demonstrate that vertical depth in their solutioning, right? Not just vertical depth. For example, if you're offering finance and accounting services or supply chain services, do you really understand, the nuances of a particular industry, even if it's an horizontal services? Not just that, they are also expecting providers to demonstrate that knowledge of business model as well, right? So if you take billing or collections, do you understand how B2B versus B2C organizations work, right? How subscription versus capital heavy organizations work. So a lot more depth in understanding of business model, understanding of industry specific nuances are also key criteria when they are selecting providers. Okay, with that, we can move on. A quick view, I think most of you may be aware, we are hosting our own event at Dallas, Elevate, specifically tailored to service provider audience. It's a 2.5 days event. We have a lot of sessions that are focused on service provider community, stakeholders who are responsible and accountable for growth-oriented, top-line oriented roles, right? Be it sales leader, marketing leader, strategy leader, channel partner, alliances leader. The sessions in Elevate will focus on, some of the themes that we touched upon today, right? On agentic AI, how the tech services are, will evolve. What does it mean for you as a provider? So there is a link, and we have also a discounted price for attendees of today's webinar, right? We'll be sharing that link, and you can register if you are interested. Okay. With that, we can wrap up with some of the key things that we discussed and take up maybe some of the questions that we have received, right? So just to summarize, there are three key things for you as an audience, right? So one is mid-market as a segment is really opening up for third-party services. It is time to lean in there, and we really see IT and ops convergence happening on the enterprises side, and some of the providers are also reorganizing themselves. Accenture's reinvention services being one example, right? And we see a lot of other providers also reorganizing themselves to better serve clients by bringing in IT ops. It is really, really important to unlock some of the outcomes for clients, right? At the same time, AI, again, it's no more optional. Everyone has to lean into AI, embrace AI to unlock new revenue streams. With that, Shirley, are there any questions that we can pick up?
Yeah, thanks, Vignesh and Yamo, for the session and going into this. Just to reiterate, if you go to the chat, there should be a link for you to register for our Elevate event that's coming up next week here in Dallas, and we'll be going over all three of these themes in a lot more detail at that event. And as a benefit for participating in this webinar today, you'll get a pretty nice discount on the registration ticket price. So please do use that link to do your registration if you haven't already. We have a little bit of time to answer some of the questions that have come up. Many of you have sent questions in earlier. So maybe I'll take the first one and direct that to you, Yamo. This is a question from Ian from Advanced Solutions. He asked, to what extent is there a demand for tactical, meaning use case driven consultative support with AI at large? Did you want to answer that, Yamo?
Yeah, sure. I think AI, especially considering the current situation, right, not all the use cases are matured. Some of them at a nascent stage and some are mature. And as I mentioned earlier, this depends on two lenses. One is industry and functional. That's where I think consultative support is critical. One, to take both these lenses for specific industries and functions, which are the right use cases that can scale for a specific organization. And two, how to orchestrate all the agents once done, right? Once all these scaled use cases has been identified, how to effectively orchestrate all these agents to create that enterprise-wide adoption. I think considering these two, definitely a consultative approach is required, especially in this particular scenario.
Thanks, Yamo. Mario just sent through a question asking whether enterprises and mid-level companies are more open to deal with new or smaller and focused providers. I'll take a quick shot at it, and Yamo and Vignesh, feel free to add anything to this. But we are seeing organizations, particularly smaller organizations, looking for support, dedicated support from providers that are able to demonstrate that they can provide them solutions that really fit their needs, right? A lot of the GSIs, for example, they cater towards large enterprises, whereas mid-market, smaller organizations may have some more unique needs, and frankly, they want the dedicated attention that they worry that they may not get if they go with larger providers. So they are open to exploring new relationships. Certainly, this doesn't discount the larger providers. Many GSIs and larger service providers have more dedicated parts of their organization that specifically caters towards different buyer segment sizes as well. But we do see that openness to explore new providers exist.
Yeah, I echo with you, Shirley, right? Specifically, the reason is this is also a pivot or investment from technology providers, right? If we look at SAP, Oracle, or Salesforce, they have dedicated offering for the mid-market segment in itself. SAP, I think earlier it started with Rise, now it is moving towards Grow with SAP, and Oracle has its own NetSuite, and same with Salesforce, right? It's Starter Suite. So tailoring to small and mid-market enterprises, I think even from a technology or a product platform perspective, it takes relatively a different lens. But yeah, I think GSIs as well have invested and have parts of the organization catering to mid-market. Yeah.
Great. The next question that I think we'll take is from Christina at Accenture. She asked a question that comes up quite often. How will agentic AI impact BPO in the next 1 to 2, 3 years? Are humans obsolete? Vignesh, do you want to cover that?
Yeah, short answer is, are humans obsolete? No. Is there going to be a meaningful impact in BPO market in the next couple of years? Definitely yes. Is the market gonna shrink a little bit? Is this market gonna go away? Really no, right? So I know it's a mixed answer. It is going to have a significant and a meaningful impact in 2 to 3 years time period on the BPO industry, but that doesn't mean that the BPO industry will vanish or humans will become obsolete, right? How the services are being delivered will change, right? And revenue sources from for organizations will change, right? So, for example, digital revenue will increase, but does that make humans obsolete? No. Instead of processing transaction, humans will be responsible for managing agents, right? So the nature of work for humans will evolve. Service delivery model will evolve, but during this transition period, there will be a slight dip in growth in the market. And then we anticipate this to, the curve that we are seeing is this kind of a curve, hockey stick curve.
Thanks for that, Vignesh. And kind of linked to that question as a further follow-up, a question from Anne from KPMG. She's asking, is AI going to be an alternative to offshoring in the context of increasing uncertainties regarding, the regulatory environment, geopolitical uncertainty, and so forth? What's your view on that?
Again, mixed view. It will make a good agentic AI will make a good business case for organizations to outsource to onshore locations. Right, there will still be efficiency and productivity gains that a service provider will be able to deliver from onshore locations. So there will be more organizations who will start to outsource but are reluctant to offshore, right? But at the same time, it will not meaningfully decrease the quantum of work that is happening from offshore locations like India, right? Say, given the availability of talent for specific skill sets, there will continue to be services being delivered out of offshore locations as well, but it won't be a cost arbitrage. It will be more of a skill arbitrage, right? So some of the agent training, model training, integration, IT, or tech services associated with AI agents, agentic AI will continue to happen from wherever the skill set, right? So it's a mixed view.
Great, thank you. Last question, maybe, and I'll give this to Yamo, and this is from Chintan from Synchrony. How are Agentic and Gen AI being used to deliver hyper-personalized experiences for customers while making sure that compliance and regulations, particularly in regulated industries, are managed well?
Thanks, Shirley. So again, I'll share some of my personal views as well here, right? One, in terms of, I feel from a addressing to a very specific customer needs, right? This is where kind of emotions become critical. And generative AI address this one from mapping an entire customer 360 profile, right? In terms of analyzing all the previous purchases, all the interactions and engagement that a particular customer has to build the right customer 360. On the agentic AI front, I think it can engage the customer at the right time, having identified this customer 360 profile, right? What the preferences of this customer are, and even from a timeline perspective, when a customer may purchase, and what the requirements could be. However, from an agentic AI perspective, still in terms of the emotions, I think that's where the human in the loop is becoming critical from a CXM function perspective, or addressing this more from a CRM or customer service. So that's where I think for now we see more in terms of generative AI becoming quite critical. Agentic AI with some human in the loop interventions. But that being said, agentic AI investments from tech providers are at a all-time high, right? Microsoft Copilot, or let it be Agentforce, addressing within the sales, service, and marketing, three domains within CXM. I think this is where we have seen increased use cases, and effectively leveraging these three models help in kind of curating the right personalized experience for customers.
Thank you so much. I know we didn't get to many of the questions that were asked today, and also the questions that were sent to us in advance. Not to worry, we'll come back to you. We have your details. We will follow up. And of course, you have our contact information on the screen. Feel free to reach out to us directly if you want to continue the conversation.